Welcome back and welcome to the video on investing in a recession and how to buy gold. Gold. I put this in my comment section or in my community tab, whatever you call it, and I asked the question, what do we think is going to happen? It's currently it's February 2023, and we don't know what's going to happen. There's a lot of uncertainty in the world at the moment. I don't know what the future holds, so maybe you come back if this ages well and tell me. But one of the questions was about, are you hedging your bets against the potential further downturn of the stock market and buying gold? And some of you are, some of you weren't, but I am. So I thought I'd share some of the best ways for you to buy gold. With the current economic climate, many investors are looking for safe havens for their wealth. And with that, gold is often seen as a safe haven and a go-to investment for those sorts of times. And there's a few reasons for that. But in this video, I want to cover 3 different ways that you can invest in gold during a recession, and then you can decide which one's right for you. I tried to cover as many different options as I can and the pros and cons for each one of those. So why is gold seen as a safe haven during these sort of turbulent and uncertain times? And it's mainly because it's a tangible asset. It's a thing. It's like a store of value. And I know that people say, yes, Bitcoin's a store of value, but gold, being a tangible asset, is often seen as a store of value. You can't physically hold stocks, but you can physically hold and store gold. So that is one of the ways that, especially in the old school, you will have people with physical gold in their possession, because if it all goes wrong, you still at least have this one tangible asset that you know is valuable and has value. And in those times, they tend to increase in value as well due to the uncertainty. But how can we buy it? Well, let's look at the different ways that you can buy gold. One option for gold, like I mentioned, is the old school way of holding physical gold. So you can go out and buy an entire bullion of gold, like a huge, an ingot, a gold bar, a coin, treasure. You're not treasure, but you know what I mean. You can literally go out and buy bars of gold and just have them like stacked up in your house, which is great because again, you hold it. There's no one that's going to take that from. Well, that's maybe one of the risks. But what are the pros and cons of buying physical gold? So firstly, with the pros, it's quite obvious. I mentioned it. You physically own it, like you have it in your possession. So one of the best parts about that is that that's yours. So you're not concerned about a company closing, any other sort of external influence. You have that physical gold yourself. It's in your control. But there are some cons to holding physical gold as well. As you can imagine, one of the biggest ones there is equally the fact that you hold gold. It's the security and the risk. You have to store that somewhere. If you store it at your house, you run the risk of, I'm not saying that you will get robbed, but what happens if you do? So that's kind of a big risk there, or you have a big safe or whatever it might be, but that's still a risk involved with you owning physical gold yourself. And another con for holding physical gold is the fact that it actually costs more to buy physical gold. Yeah. So when you look at the price of gold, you look at the price per kilo of gold that you would just buy not physically versus physically, and it's about 2,000 euros more. So to put it into perspective, it is about 55,000 euros currently, February 2023. Let's see how this ages, to buy a kilo of gold. And a kilo of gold is pretty heavy, but if you were going to buy a kilo of gold physically, and actually get the thing posted to you, that will cost you 57,000. So there's obviously a bit of a difference, and that's the same depending, obviously on what size you get. It is always more to buy the physical thing than it is to buy it just through a broker and they hold it for you. And lastly, on the cons, it's the liquidity. And by that I mean that obviously you hold the physical gold, but if you wanted to sell it, you have to find someone that's willing to buy that gold from you. And now that might not be a big problem, but it's still something you have to do, and it's far more work to do that than it is just to sell it online, as in if you didn't hold the physical tangible thing itself. So they are the pros and cons of holding physical gold. I looked at about 3 different places that you can buy gold online, and I'll put all of those in the description. I haven't used them myself, so it's do your own research on these. They all looked very reputable. They have lots of things at the bottom to say they're reputable, so it's something that I might look into, and I'll follow up if I do, because it'll be quite cool to just have gold in little chunks. I don't know why, I just think it will be quite cool. But link in the description for all the different ways that I've found European wise and actually some American, that you can buy gold in the description. The second way to buy gold is through gold ETFs. And again, not financial advice, but this is my favorite way of doing it. And these are the reasons for it. And if you don't know what an ETF is, it's an exchange traded fund. And please see my video somewhere. I might put a little link up here to what an ETF is, but they have specific ones around gold. And you can have ones around physical gold as well. So that's where a fund holds the gold for you and you don't have to own and do all of the stuff above to hold that physical gold yourself. And so here are the positives and the negatives for exchange traded funds or physical gold. One of the pros is liquidity. Like I said before, the illiquidity of physical gold, you are much more liquid with this because they're exchange traded. You can just simply go onto your app. I use Trading 212 and I'll tell you the ETF I invest in a minute, but you can literally just sell your share of it. So that's really easy. It's easier than going out finding someone to buy your gold. That's true. And again, to counter the last bit, there's less of a security risk. Like, you don't have to then worry that someone's going to come and rob you, steal your gold bullions, and then you'll be done. So, I mean, that's a big plus. But then you don't have like a big gold bullion. So that's, you know. And another one, just the ease. Not just the ease of liquidity, the ease of buying. Like, I don't need to worry about paying extra because, again, like I said, it's cheaper to buy it without having to have the physical part, and I can just log in to Trading 212 and I buy shares of my iShares Physical Gold tracker, which is the one I use. So it's iShares Physical Gold ETC. The ticker is IGLN, and that's right, on Trading 212. And you can do the same if you want. If you want to do the same, realtalk.business/T212, you can get up to 100 euros of free shares for that. Link will be in the description, but that is the ETF that I use for physical gold. And it's run by BlackRock, and if you don't know BlackRock own, or they have, over $11 trillion in assets under management. So when it comes to that kind of security around it, I'm pretty confident with it. So yeah, link will be in the description for that one, but I use the iShares Physical Gold ETF. That's what I invest in, again, for pure ease. But with anything, there are always cons as well as the pros. So the cons for ETFs are, well, you have to pay money for it too. And I mean, not just pay for the gold, but because it's an ETF, it's a managed fund. So someone's got to manage the fund, so you've got to pay for that. So if, for example, the price of gold did nothing or went down, you're obviously going to lose money with the price going down, but even if it just stayed the same for the next 20 years, your investment, say you invested 20,000 euros or $20,000, whatever, you would be paying around 80 euros, $80 per year in fees. So those fees are obviously storage, insurance, management, but it all comes with a fee. So that is one of the cons, that just you will have to pay that. It's called an expense ratio, and it's normal. It happens for everything, but typically things go up, so it isn't really a problem. And for the balance of ease, security, less risk, more liquidity, I personally pick that option of ETFs because it's easier, and I like ease and accessibility, not gonna lie. Lastly, the last con is commission. Obviously, if you're buying through an app, I use, again, Trading 212. That's where I do my gold ETF. You will still pay a fee for buying shares. You always do. But the reason I use Trading 212 is because they're extremely reasonable, and it's never enough for me to think, I'm not going to do that. So while you do have a con there, you have to pay the fee. You don't have to pay a fee with physical gold. You just buy it. You still got to pay for shipping and stuff like that. So you know what I mean? Balance. And my third option for buying gold in a recession is a slight curveball, but I'll explain why. I should really say investing in gold versus buying gold, because the third option is investing into gold mining companies. Because when the price of gold goes up, this obviously has an impact on gold mining companies as well. And again, while picking individual stocks for gold mining companies can be difficult due to the fact that there's higher risk involved, and I'll go into the pros and cons of all of these in 1 second, you can equally buy ETFs of gold mining companies to try and diversify and spread some of that risk. So what are the true pros and cons of buying into gold mining companies? Well, the pros. You have potentially higher returns because a company is not tied to the price of gold as well. So that is the positive as well as a negative, but the potential positive is that a gold mining company could go exponentially higher than gold. It would be linked to a part of the price of gold because obviously the demand is higher, there is more value in gold, so there's more value in the gold mining companies, but it's not directly linked to the price of gold. That makes sense? So you could make more money. Could. Really depends. Another pro for this is again a bit more diversification. You're not just tying it to the asset of gold itself, you are tying it to stock too, but that equally comes with risk. But as I said, diversification is pretty good, so that is a positive side as well. But again, there are also cons, and this one is a lot higher risk because it isn't directly tied to the price of gold, and picking stocks, like I said, is very difficult. You do have a much higher risk with it not yielding the results that you'd like. So with gold, you know what you're getting. With companies, you cannot predict that. So while there's a potential for higher profit and higher reward, there is a potential for higher loss at the same time. And it's dependent on the success of the company rather than the value of the gold. So that becomes an even bigger risk. And there's a lot more volatility within the stocks of the companies versus the actual tangible asset or the commodity that is gold itself. And lastly, the price of gold mining companies is affected by not just the price of gold, it's affected by so many different other environmental factors or just general factors in play that you cannot predict. So anything could cause your company, it could be a geopolitical event or like a political dispute, anything could cause the stock price to go down. Whereas you wouldn't have that same effect on physical gold itself. Are we with me? I think that's pretty clear. So is it a good thing to buy gold in these sort of times? Well, I'm making a video about it, so I clearly think it's a fairly good idea. It's something that I'm doing. I think the diversification is one of the things that should be considered, especially in times like this. This is why I've done previous videos on why I'm diversifying it more into property at the moment, in certain parts of property. So when it comes to gold, while it can be fairly volatile in the short term, over the long term, it's seen as a very stable store of value and something that's generally a good asset to have in your portfolio. While I'm not putting 50% of my portfolio into gold, I think it's one of those things that helps, again, hedge against potential recessions, depressions, whatever it might be in your diversification. So splitting out some of your stuff, maybe less or fewer high risk stocks or crypto, and put some of that into gold. So that's kind of what I'm doing. I'm putting maybe 10%, 20% into gold because I think that over the long term will pay off. And regardless, while it may not have the same huge return potential as high growth stocks, it equally hedges against the potential downturn or potential losses that we have seen in the stock market as well. And you know that I like diversification. If you've watched any videos on my channel, I love the different alternative investments. That's kind of what I cover. So what's right for you in this? What do you think is right for your investment strategy? Well, only you can decide this. Personally, I do like I said, the gold ETFs, and that's not the gold mining companies ETF, it is the iShares gold Physical Gold ETF. That is my preference for ease and access. I think that is probably the best option for me. But this is not financial advice. This is purely for my own entertainment and maybe yours. You have to do your own research and decide what is right for you. Like I mentioned before, if you're interested in getting potentially up to 100 euros of free shares, you can use my link on Trading 212, which is realtalk.business/T212. Sign up, deposit 10 euros, and you will get free shares, whatever that looks like. And you can chuck those straight into a physical gold ETF, and you're already on your way. Bonus, I'll put a link in the description. And at the same time, if you like these topics and anything around investments, building yourself a better future, anything like that, you can hop on to my Discord server. It's completely free. I don't believe in paid Discord servers. I'm just trying to create a community of like-minded people trying to build themselves a better future. And that is realtalk.business/Discord. Again, the link will be in the description. Hope you enjoyed this video on ways to invest in gold, helping you to diversify your portfolio in a recession or a downturn in the market. Like these sorts of videos, don't forget to subscribe to the channel, and if you like this one particularly, don't forget to press that little like button. So it's apparently a good thing. And remember, share this video with your nan, and I'll see you on the next one. Peace.